Okay, let's talk about buying a home. It's a massive milestone, right? But let's be real, it can also feel super confusing. If you're feeling a little lost in all the noise, don't worry, you're definitely in the right place. So you've decided I'm ready to buy a home. First off, that's awesome. But then comes that big, kind of scary question. Where do you even begin? It can seriously feel like you've been dropped into a maze with no map. But what if we reframe this? What if buying a home isn't some big, scary chore, but a quest, an adventure? And you know what every good quest needs? A map. So think of this explainer as your map, your guide to tackling the most important first step, getting a handle on home loans. All right, let's dive right in. Your home loan quest. Honestly, understanding your loan options isn't just a good idea, it's the key to making a smart move. This is really where the journey begins. So, every adventurer needs the right gear, right? In the world of home buying, your most important tool, your Excalibur, is your loan. And you've got a few different paths you can take. So, let's check them out. Okay, so here's a quick look at the four main paths you can take. First, you've got conventional loans. These are kind of the standard. Great if you've got a solid credit history. Then, there are FHA loans. These are backed by the government, which is why they can be a bit more flexible if your credit isn't perfect. Now check this out. VA and USDA loans. If you're an eligible veteran or you're buying a place in a qualifying rural area, these are incredible. Why? Because they can offer zero, that's right, zero down payment. That's a total game changer for a lot of people. And hey, here's a little pro tip for you. Don't sleep on your local and stay programs for first-time buyers. Seriously, look them up. They can offer help with down payments and other costs, which can make that first step way, way more affordable. Okay, so you've picked a path. Now it's time for the trials, the challenge of getting approved. Let's pull back the curtain and see exactly what lenders are looking for when they get your application. It really boils down to four main things. Lenders are going to look at your credit, your debt, your income, and your savings to figure out if you're ready for a mortgage. So let's tackle each one. First up, the big one, your credit score. You can think of it like your financial report card. And a higher score, that usually means better interest rates and better loan terms. Now, a slightly lower interest rate might not sound like a huge deal, but trust me, over the 30-year life of a loan, it can literally save you tens of thousands of dollars. It's a really big deal. So, here's your first little side quest. Do you know your credit score? If you don't, now is the perfect time to find out. You can't plan your journey if you don't know where you're starting from, right? Next up, something called your debt-to-income ratio, or DTI. It sounds complicated, but it's not. It's just a simple comparison. Lenders look at how much you owe each month, like car payments, student loans, credit cards, and compare that to how much you earn before taxes. It's their way of checking if a new mortgage payment would stretch you too thin. Okay, next on the list is stability. Lenders love to see a steady, reliable income. I mean, it makes sense, right? They're lending you a lot of money, so they want to feel confident you can pay it back. The usual benchmark they look for is about 2 years of consistent work history. So take a second and think about your own situation. Have you been working pretty consistently for the last couple of years? If so, that is a huge green flag for a lender. It's a really important piece of the puzzle. And of course, we've got to talk about your down payment and savings. When a lender sees you've got money saved up, it does two things. It shows them you're financially stable, and it proves you're ready for the real-world costs of owning a home. So another personal question, have you started saving? And hey, it's never too early or too late to begin. Even saving a little bit consistently adds up way faster than you'd think, and it shows you're serious about this goal. Okay, let's fast forward. You've passed the trials, you've gotten the loan. Congratulations. But what are you actually paying for every single month? Let's decode that monthly payment so there are absolutely no surprises down the road. So your monthly payment is usually made up of a few key parts. The big chunk is your principal and interest. That's the money that's actually paying down your loan. Then you've got your homeowner's insurance, which you have to protect the property. Next are property taxes, which go to your city or county. And sometimes, if you put less than 20% down, you'll have something called mortgage insurance. Oh, and one more thing to keep in mind. If your new place has a homeowners association, you'll have HOA fees on top of your mortgage, so don't forget to budget for those. And that's it. That's the map. You're now armed with the knowledge to get started. You know about the different loan paths, you know what the lenders are looking for, and you know what's actually in your monthly payment. You are ready to start this quest with some real confidence.
So there's really only one question left to ask, and it's the most important one. You've got the map, you know the way forward. What's the very first step on your path to home ownership?